Welcome to the Smart CEO Smart Chat. I am Kyra Hardwick, and I am thrilled to be here with you. Thanks for tuning in. We hope that this episode will be an incredible influence on the way that you do the work that you do every day. So whether you're a smart CEO, working from home, working from the office, simply navigating your life and family, whatever it is, today's the day you made a great decision to tune into our podcast and get this smart talk. So let's dig in. Welcome, everyone, to the next episode of the Smart CEO Smart Talk podcast. I am Kyra Rénel, and I am absolutely thrilled to be here with you today. As we do with every single episode, we bring you the best. We bring you the best experts, the best insight, and the best stories about the process of growth as a CEO in the world of business. And whether you're just simply CEOing your life, like the whole goal here is that we become smarter along this journey. And I am excited to introduce you to my colleague today. We met along my journey in the small business space, really building and working with suppliers. Just an absolute advocate and expert in the world of business finance. If you've ever had anyone ask you the tough questions and wait in that silent, awkward pause for the answer, I'm going to tell you now, Kimberly Evans is the one. She will make sure that you get to the root and you know your business and you know where you're going. So, Kimberly, I am excited to invite you to the Smart Talk podcast. Welcome to the podcast today.
Kyra, thank you so much for having me on your podcast. I've been waiting for you to invite me. So finally, I'm important enough to be able to participate in your podcast.
You are not only that, but you are absolutely a part of the Smart CEO community. You are one of the reasons why I've had to think long and hard about strategy and our approach to the business, just to make sure we're really doing it in an exceptional way. So you guys know exactly how this podcast is probably about to go. It's going to be a lot of fun because Kimberly's going to make sure we dig in. Kimberly, I would love for you to share a little bit about your journey. Of course, introduce yourself to the Smart Talk community, but I'd love for you to share about your journey as well as you do that.
Sure. Yeah, I think what's important for your audience to understand about me is that we're in this together, right? I not to just digress all the way back to childhood to little Kimberly, but no, my parents were entrepreneurs. My father was a contractor. My mother worked alongside of my father in his business. She had an ancillary business to my father's contracting business. In addition to, for years, my family owned commercial real estate. And really what got me attracted to the world of business and finance is in 70s and the 80s, which was a very difficult period here in America, high inflation, everything from all embargoes to the savings and loans, banks actually defaulting. This was long before the Great Recession, right? So just depending upon your age, most people won't even remember that period in the 70s and 80s, but I remember as a child because I watched my parents both lose their businesses. And in addition to losing their businesses, they had to start liquidating a lot of our assets and resources to be able to make up for the funding that my father was losing from his business. And so it got me curious early on in age as to why is it that when there are tough times, certain companies make it and certain companies don't. And what are the nuances that come with that? Because it wasn't hard work. My parents were as hard working as anyone else. It wasn't attention to detail. My parents worked in their businesses, paid attention to detail day in and day night, 7 days a week. So, a long story short, I got my degrees in finance and accounting, as well as an MBA, and I went on to have a career in banking, where I have worked with businesses as small as mom and pops, and now all the way up to my current role in a leading financial institution where I work with clients that have billions of dollars in revenue. So I have a very unique background in that I have worked with startups, individuals who starting from nothing to building to scaling and going from hundreds of thousands to millions in revenue all the way to now billions in revenue. And I take my background when it comes to working with these entrepreneurs and with these companies, financing at different stages of business, not only different stages of business, Kyra, but through different economic markets, right? We know that we have troughs, we have downturns, we have growth. We have all of these economic periods where if you are an entrepreneur and a business owner and you're looking to be a going concern, you're going to also have to learn how to navigate your business through these, what we call different economic cycles. We just saw recently in 2020, 2021, going through the COVID crisis, that there were thousands of businesses that failed, some even close to us. My cleaners didn't make it through the recession, as well as some other businesses. And again, it boils down to your resiliency as an entrepreneur. And so what I bring to the table and what I love about my background is that I'm able to relate to entrepreneurs at $1 all the way up to billions of dollars in revenue.
Kim, I'm sitting here listening and I'm like, if anyone took notes and wrote down this life cycle, there's a couple of tracks. There's your background and life cycle, which brought you to a point of personal authority around the idea of business success. Then there's the career track that you've taken that has taken you on a variety of layers and levels to understand how businesses work and how people think in their businesses from a finance standpoint and really strategy at its best. And then there's this, I think, this current day understanding, because when the pandemic happened, a lot of us may have heard about some of the defaulting of the banks, the debacle of our economy based on the residual effect of that, the recessions, the inflation, all of these major milestones that impacted us financially. And before I go to my other question, I'm going to say this. We forget that it takes cycles and revenue cycles, and as you call them, financial economic cycles, thank you, to actually come out of those loops, right? If there's a depression, there's a period of time that you actually have to come out of the impact of the depression. It doesn't change when someone says we're not in depression anymore. And I think we forget about that from an economic standpoint, and we feel like, oh, we're supposed to all be able to bounce back from, even like today, current inflation. Current inflation has me thinking about everything. I was literally everything from like the cost of my hair, getting my hair done, because that is impacting me. And where I would never typically ask the cost, I just pay it when I leave because I know what I want.
Yeah.
I'm asking the cost. And I'm like, man, is this what I normally pay? Because inflation is built into those, or at least the impact of inflation is built into those numbers. And so when we think about it as consumers and as business owners and just individuals in general, those layers and cycles that you have, Kim, those are absolutely priceless in terms of exposure. And I learned today, and I can't believe I hadn't heard that story about your family. And if I did, not that way, about how they demonstrated to you like this space around business, because you have a relentless approach to business success. Like it's every business owner you meet and their business, it's almost like you're like, I know you can do it. Here's your pivot, here's your move, here's your adjustment. It's come on, you got to do it. So I'm going to ask you this question. What is it, Kimberly, that business owners or aspiring, and you spoke from $1 to $1 billion, what is it that they can do? What can they leverage to get more of what they want out of life? And that's a huge question. We'll start with business and then maybe shift it into kind of lifestyle. But what is it? What are some of the things that people can leverage? Because just hearing your story, you've done that.
Yeah, and that's actually a really fair question, Kyra, because here's what's truth is that before you are able to become a public company, meaning that you get to the stage where you're big enough to have some IPO, initial public offering, and now you're no longer a private company, you're in the public sector. And so therefore, anytime that you need to, for the most part, raise capital, you can either go sell more stock, et cetera. And so your liquidity needs are completely different when you are a private company. When you're a privately held company, meaning that you are not publicly traded, your stock is not on any of the exchanges, you are your company as the owner. You are your company in terms of your own personal finances, your own personal financial security is tied to your company.
That's right.
I have clients who are still privately held, but are in the billions of dollars of revenue. Now, whether you are a billion revenue company or a million revenue company or 100 of thousands in revenue company, if your livelihood is tied to your company, you need to pay attention to certain details because that's where the wealth and livelihood of your well-being comes from, right? And so that being said, entrepreneurs, when they are starting to look at their company from the perspective of, I want to, at some point in the future, create some type of liquidity event that is going to allow me to, number one, first and foremost, stop working in the company. I think that entrepreneurs, when they start a company, They're so hung up in, I got to get this thing up and running. And if you're at the stage where you're actually scaling and growing your company, wonderful, that's one stage. But I always like to start from the end and work my way backwards. That is just a strategy that I have deployed throughout my life. And you may not even know hard numbers, but you have some idea of what it's going to take in order for you to be able to stop working. And the day that you do stop working in your business, at what net worth do you want to be at that point in time that will allow you to live your life the way that you want to live your life? And that in and of itself starts to get you to think as an entrepreneur, what exactly am I building here? What exactly am I creating here? And that can look differently for different people. We all, if you're not familiar with Mael, that was a Black-owned started hair care product that sold to a major publicly traded company.
Yeah.
And when you actually look at her story, and it's not just her story, there's other stories out there. The Johnson family, who,
That's
from
right.
Black Enterprise to all of their publishing, you have to have some idea in mind of what it is that you're trying to achieve. And many people come into it thinking, oh, my children are going to take over my business, but yet they've never trained their children up to take over the business, right? So that means you need to come up with another plan. You need to check with your kids and make sure they even want your business. The way that you have some type of liquidity event may be that you sell to someone else. Those someone else's can be your existing employees. Just recently, with not to something,
Yeah.
but Sean Diddy Combs is recently in the news when it comes to his media conglomerate. He's actually sold the majority of the shares back to his employees.
Yeah.
And so that in of itself also created a liquidity event for him. So when you're looking at your company, you have to be able to decide from the back going forward, what do I want from my hard work and my years of building this company? Do I want to stay in this company for 20 years, 30 years? Do I want to stay in this company for 5 years, 10 years? That it all depends, but you have to be able to ask yourself that at some stage. It may not be in the first year or the second year, but as you start to enter the third year through the fifth year of your business, you have to start thinking in terms of being a going concern. And as a going concern, how do I want to exit out of this company? And that will help start to shape how you make decisions about how you build and grow your company.
Now, listen, Kimberly, I'm gonna tell you right now. Again, this is as we would say, if this was your favorite song, this is a banger, okay? Because what you just shared, literally, is probably $1 million plus consulting strategy with our listeners. That's number one. And then number two, most business owners, and you said it, do not enter this process thinking, how am I going to start this to get out of it? Most do not. Now, if it's our second or our third company, we're going in with that kind of knowledge, but most are not. And so I'll speak even for us. Soon at the end of this year, we'll hit our 10th year.
Okay.
I didn't start thinking about exit probably until about a year and a half, 2 years ago. And the reason why is because I recognize that I don't know if I have to do this every day anymore, so to speak, like I'm doing it. I still believe that our business and our company is providing incredible value. Obviously there's a level of value we want to get the organization to. So those are some of the things that are driving us. But there are other folks that can do this work alongside our team. What does that look like? And so when I think about the fact that I was about 8 years in when I decided to think about exit, business owners now have, that's a whole nother strategy. It's another approach. It is likely not necessarily going directly to my children. So there needs to be a number two that's strong enough in the business now to be a part of the strategy as well. And a lot of business owners, regardless of size, we talk family businesses and partners and that are thinking about succession. That process is a challenge in and of itself. If you've been the best thinker in the company all of your years, transferring knowledge, which really equals transferring trust to other people, is a challenge. So I think what you just shared is such an eye opener for the listeners. So those that are aspiring, start with the end in mind. We've always heard that, right? But as you're excited about making that first million, that second million, that first hundred million in your business, I do think that the more of us that start, Kimberly, with your insight, of starting with the end in mind. What is the divesting plan and strategy? We will be better off because we'll run the business with a different way, with a different frame of mind. And that has everything to do with really leveraging what you have. So I'm gonna take you into this next space. I really would love to hear your opinion around it, which is for businesses that are mature, businesses that have done well. They're making money. They can employ people. They're creating jobs. What would you say to a business owner, that a CEO that is really stuck in that middle spot where they're just like, I need to leave. I don't know if I can leave. They got to pull and tear a way to figure it out. What would you give them as an idea, or maybe a method based on what you've learned or what you know in the market, on how business owners can find that breakaway path?
Yeah. It really is, again, based upon financial fitness of your company, right? One of the measures that we look at from a financial perspective is EBITDA. And you will, anyone who is in business and you've been in business for at least 5 years and you have any type of financing taking place with your business, you are very familiar with earnings before interest, tax, depreciation, amortization, right? And it's one of those things where it's loosely known, but you will not be able to sell your company for more than what it's worth. Even if you're wanting to exit out of your company through a direct sale or sell back to your employees or some other form whereby you're thinking in terms of an exit strategy, and you are even considering a merger or some type, or being outrightly acquired by maybe one of your competitors. But you have to start thinking in terms of your business, and your business like any other asset that you have, whether it's a stock that you own or even your home, right? You want to be able to know. You would never put your house on the market without going to a realtor and saying, hey, let's get some comps, so that I know that when I do want to start selling my company or my home, it's at this price. And at least you have some number. And then based upon that number, you could decide, I may be looking to exit out this thing a year from now, 2 years from now, or immediately. One of the things that we cannot do is predict the markets. The markets are what you will hear investors say all the time, a random walk. But you should have some idea of a multiple. And when we in the financial world use the term multiple, a multiple based upon a valuation of what your company is worth. And sometimes it's as simple as 2 times, 3 times, 4 times EBITDA. And that's why that EBITDA is so important. And that is earnings before interest, tax, depreciation, and amortization. And that holds for most entities, whether you are an LLC, whether you're incorporated, or whether you're in a partnership. So that's number one, right? It doesn't have to be a solid number, and that number is going to go up and down, no differently than the value of your home. If you get it appraised today and you get it appraised next month or 12 months from now, you're going to get 3 different appraisal numbers, because it's all driven by market and what the market is willing to pay for businesses similar to yours, even a small business, right? Or a mid-sized business. So number one, have some idea of, if you are that CEO and you're in that stage and you're looking to exit, hire yourself a broker, a good broker, business broker, and start going through the process of doing the math along with your CPA or your accountant of actually what is your business worth. Oftentimes, Kyra, what people realize is that they think that their business is worth more than what the market is willing to pay for it. You can love your house because you put all of this wonderful stuff in it. But if the market is only willing to pay XYZ dollars for it, guess what you're going to get? You either get to keep it and not sell it, or you're going to sell it for what the market is out there. And again, going back to Kyra, whether you have $1 million company, your livelihood is going to be dependent upon, to an extent, for that moment, the liquidity factor that is going to take place when you sell that company. And that number shouldn't be a surprise to you. You need to have some idea of what that looks like.
That was good. How soon is too soon to get the appraisal of your business?
I think as soon as it starts to pop into your head that this is something that you may be wanting to exit out of, because you want to have, again, some type of liquidity event to either go off and retire or buy another business or whatever it is that you want to do, right? It's your choice of what you want to do with the capital. But I think as soon as it starts to pop into your head, the idea that someday you may want to sell this company, you need to have some idea of what it's worth, because that will help you to decide, Do I need to hold on to this company and grow my revenue a little more, and so I can get my EBITDA up? Because I'm gonna sell at some multiple of my EBITDA, and that's just a quick and dirty way of establishing the value of a company. Or you can decide whatever decisions you're gonna make, right? You can think that, okay, maybe the market in the next year, 2 years is not going to be as attractive as it is now. So I want to be able to at least put it on the market potentially with a broker to sell right away. But it's to answer your question, Kyra, as soon as it starts to pop in your head or start to come up in a conversation that I may want to exit this company in some way someday soon.
That's really good. That's really good. One of my long-term clients, we started that due diligence process of getting an evaluation on the business and brought all the partners into the room, from attorneys to bankers, to really determine if it was to their advantage to sell or
Mm-hmm.
to buy,
Mm-hmm.
and using and leveraging their business value to actually buy and acquire other companies too. And I think when we think about exiting or leverage, we don't always think about it from the perspective that you can actually acquire and grow even more before you have that event where you're going to actually sell and leave the business, or maybe
Yeah.
create another model. So just, I don't, you answer that question excellent, in an excellent way, for us to understand that as soon as you start thinking about it, that means, I call it that, like your knowing knows that there's something more you should be doing as an owner,
Yeah.
to start thinking about the future of your business.
Yeah.
So Kim, I want to jump into something about you. So when you think about leverage, Kim, you're brilliant. You shared your brilliance with us. We're all probably like gleaning. We're going to be hitting the rewind button on this as well to really pull those notes in and process what you're sharing. But how has that worked for you? Like leveraging your skill set, your knowledge, your dreams to really build more of what you've wanted.
I again, Kyra, I've had such a wonderful opportunity in my career. I've been on the entrepreneurial side as well, where I've worked as in a small business myself for several years with some partners, and we navigated ourselves through the Great Recession period. So I've been in corporate America, I've been in an entrepreneurial journey. But one of the things that I enjoy in terms of just leveraging my assets is putting that into forms that I can share with other individuals, whether it's over podcasts. I'm in the process of actually writing a book that is going to allow me to put a lot of this information and knowledge out there to individuals so that they can take it themselves, flip through the pages, highlight, rewind, audiobooks, things of that nature, to really start to understand it. And what's important, Kyra, is that when we're talking to entrepreneurs, in particular entrepreneurs of color, women entrepreneurs, I see in my industry all the time great businesses that could have, throughout their tenure, built more value. And that value translates into just more money for you as an owner. And because of just certain decisions that could have been made throughout the life of that entrepreneurial journey or that entrepreneurial business, they just were not made. And so I spend a good amount of my time working with entrepreneurs, working with my clients, leveraging the knowledge that I've gained over the years of success that I've seen through clients, as well as some of the things that I know many of my clients have been able to share with me. Had they had the opportunity to do things differently, they would have done XYZ, right? But what I tell individuals all the time, don't what if yourself. Don't what if you would have done this? What if you would have done that? What's done is done, right? But what I do get to have is a looking glass in terms of when I am speaking with entrepreneurs who are going through their process. And had those entrepreneurs not gone through what they went through, they wouldn't be where they are today, right? So you can't avoid going through life, right? Life is gonna life. But what I can tell you is that the sooner that you can get to good advisors from an accounting and a CPA, from a legal perspective, from a business coaching perspective, that all is accumulation of potential value that you build into your business. We love in the financial world, speaking of compounded interest. And so
Yes.
I look at this as one of those opportunities to have that compounded interest. And you're building that compounded interest through the experts that you are surrounding yourself with as you're going through your entrepreneurial life. And I can tell you this much, Kyra, as I talk to my most successful clients, one of the things that is the same across the board is that they all were able to, number one, get good advisors on board early stage in their businesses. And these advisors were individuals who had also worked with businesses that were worth billions of dollars. Oftentimes, it's very difficult to get someone to lend their information and knowledge to you if they have themselves never worked with someone who has reached a certain pinnacle in business, right? And so you're all guessing together. And oftentimes that doesn't work out too well, right? Or it doesn't work out as good as it could throughout just the livelihood of your business. So I spend my time really just making sure that iron sharpens iron, that I'm putting myself in position to be able to advise and coach and speak to entrepreneurs really on what it's going to look like and what it takes in order to get to those next rungs on the ladder.
That was really powerful. What would you say, or who are your essential advisors, Kimberly?
In the industry, I would say, in terms of just looking at other giants who have been in the financial industry, some or have retired out of the industry, but really just looking at it through the lens of not just from a career perspective, but what value were you able to lend and leave, and what did you do to build up yourself in order to be a person of credibility in this industry? There's a lot of folks in the financial industry that don't know, as my grandmother would say, know their head from their feet, right? But they can talk a good game. But really paying attention to those pioneers and giants in the industry who have been able to truly help their clients, and you can see the growth of their clients moving from one place to another. That's in the industry. Outside of the industry, I have several just mentors and role models that I've accumulated over the years, from college professors to successful entrepreneurs who are also billionaires themselves, entrepreneurs who have built and sold companies multiple times, who have balance sheets that are in the millions and billions of dollars, personal net worth. And this is where I get my information from. And these are the people that when I have a question about something or I want more insight, these are the individuals that I lean on and that I go to for information. Because Kyra, look, there is a lot of information out there. There's so many people claiming to be experts at this, or as they call them, influencers, and they haven't built a damn thing other than their likes on social media. But yet they're advising other people on what to do and how to build their companies. And that's very dangerous, especially when you look at in our many times in our community. I'm a Black American, African American. Black female entrepreneurs are the fastest growing entrepreneurs in America. But yet the numbers are staggering. And when it comes to the number of these businesses that will actually make it to $1 million in revenue. And then when you look at companies that are making it to 5 million in revenue and 10 million in revenue, you're getting down to single digit numbers. And that is something, and that what I love about the Kyra company and the work that you are doing, Kyra, is that you have to be able to get people in front of the folk who are actually working with and have worked in the industry in a manner that is credible.
Yes, absolutely. I'm sitting here like digesting it. You hit so many of those rungs, and I'll say that is at the core of the Kyra company, Kimberly. I'll share this. One of my advisors very early on was actually my business coach, and I finally invested up to that $10,000 investment, so to speak, with her. I was like, I made it. I started at free 99. I can write you this check and I don't have to ask you what day you're going to put it in the bank. So it was like, I would remember I was sitting in my VIP session and we were building out a model, and she was just like, you need a pipeline, you need a revenue generator that feeds your business. What do you want? What do you want? What do you want? And so she was creating the model and I was talking through it. And I said, no, I said, because that model that you're creating takes before it gives. I said, that's not in alignment with who I am as a person. And it just started like really becoming like super obvious to me. And I'm going back to that comment you just made. And so while we were doing it, I said, I want to give something first before I take from them. And in her mind, if she was trying to see where I was going, I said, I want to give insight, information. I want them to trust me before I ask them to buy something. And I want almost their request to buy something to be a part of the journey, not like a click to buy, so to speak. I wasn't trying to buy clicks. And when as she was listening to me, it was like all coming to me, quite frankly. As I was sitting in that session, we whiteboarded the smart CEO pathway. For it's a pipeline, And we started it with giving away information online and then I taught people how to do that. I thought, I'm a business developer. I'm the dirty side of the business. I'm going to show you the exposed wire, the drywall that hasn't been painted, because I want you to understand how to build.
Mm-hmm.
And so when we were doing that, I'm like, that's just who I am. And she started to take those words and start shaping it. The way that we arrived at the Smart CEO platform as a pipeline, so to speak, was I started offering information and educating around the idea of business development and business
Mm-hmm.
management and strategy. I didn't give away my core. I taught the idea so people would understand why this was an essential.
Yeah.
As we did that, Kimberly, we've evolved now to being able to have one of the largest financial institutions on our roster, some of the largest privately held companies on our roster now, to be able to provide that education to business owners. But it started with me not negotiating what was important, which was to be able to help people. I knew what it felt like. Ooh, when I went to my very first paid coaching conference or whatever, and I'm standing in the back and I'm like, okay, I'm going to get into one of these programs. The list goes up and they're selling in the back of the room.
Yeah.
Oh my God, Kimberly. So they're talking about these levels, right? There's a $15,000 level and it went all the way up to $30,000. And I'm thinking to myself, I just lost my job. I'm out here at this event spending this money. I got to justify when I get back home. And I'm standing in the back of the room about to make a decision. And I'm hearing people on the phone with their mortgage companies pulling from their escrow, remortgaging their homes to buy programs.
Yeah.
Kimberly, oh my
Look,
gut
Kyra,
was gut
look,
wrenching.
one of the things that is not often talked about in the CEO space is image, right? How do you
Yes.
see yourself? How do you perceive yourself? And you can translate image over to brand, right? Image, brand, all of these things, they coincide, especially when you are a CEO building a company, building a
That's right.
business. And there is always going to be some form of sacrifice in business. And one of the mentors that I enjoy, I'm an avid reader, Kyra, I'm always reading. And he's no longer with us, but it's Bob Proctor. Bob Proctor is in
Yeah.
personal development. He's one of the best experts, and he even borrowed from Earl Nightingale and people who came before him. These are tried and true principles. And one of the things that Bob Proctor was actually speaking with Mary Morrissey, who I love, Mary, she's also personal development, was sacrifice, right? And changing that term of sacrifice to giving up something of the lesser so that you can have something of the greater. Oftentimes we think of sacrifice as this painful thing that takes you through this ritual where you're crying and all this other kind of stuff, right? No, sacrifice in its true sense, right, is giving up something of the lesser so that you can have something of the greater.
That's
If
good.
you are giving up something that is causing you physical pain or financial pain, you might want to reconsider that. Right?
Come
Even just
on.
buying a program, you might want to really just sit back and reconsider that, because you're not suffering. You're not.
Right.
You should be happily giving up things because you see yourself moving into something of greater nature.
That's right.
Right?
That's right.
And then the sacrifice is just a part of that transition. It's a part of that transition. So that being said, Kyra, I know that we've talked about a lot of things today, but I would love to be able to just hit home on some conversations that you and I have had in the past, especially when it comes to working with CEOs and growing and
Yes.
scaling businesses. I often get asked, especially in the world of finance, we hear a lot, I can't get money. I would love to be able to do this, but I can't do that because the bank won't or whoever won't. Let's start to
Myth.
change that conversation. Let's
Yeah.
start to change that conversation and the narrative around that, especially being a CEO. As a CEO, it is your responsibility and accountability to make sure that your company has the finances that it needs in order to continue as a going concern. And as you're growing and building your company, you can't do it all by yourself.
That's right.
It is imperative that you start, and if you haven't started, to build in a team, but build in a team of your accountants, your CPAs, knowledgeable individuals that you can add to your team, controller. For those of you who have scaled enough to that you have a true C-suite where you have a CFO full-time on staff and not a fractional CFO, you have a COO, someone on staff. These are the teams that are necessary to really start scaling and growing your company. And at that point, you are really building a relationship, not only internally with your internal team, but you're building in your relationship with your external financing teams. I know, Kyra, you and I have gone back and forth over a lot of things, and the Kyra company offers a lot of value when it comes to understanding operations, people, profitability. On my side of the field, as you're growing into your company, one of the things that I love to educate entrepreneurs on is being able to grow your operations and grow your expertise. That means your financial operations, everything from your financial reporting. You can no longer just completely depend upon certain financials at a certain stage. And as a rule of, if you reach anywhere between 0 to 3 million, company prepared statements are great. As you move into 3 to 5 million, you really should start looking to have a CPA and your accountant start looking at reviewed or compiled statements. And between 5 and 10 million, you really should start having more of your accounting done from a review basis. But at 10 million, you have reached audit stage, audit status. And why is that? Because you're now no longer in small business. Oftentimes, when I talk to entrepreneurs, Kyra, they think that the small business bank or the business bank portion of whatever financial institution they're working with is it. That's not, they're not it. There's another group at your financial institution, and they're known as commercial bankers. And those commercial bankers usually start to pick up businesses depending upon the institution at about 10 million in revenue.
That's
And
good.
and you should really start to look at not only scaling your business from an operation perspective, but also scaling your business from an external advisor perspective.
I'm glad that you took us there because there are so many layers in there. And I encourage every smart CEO to think about where they are on the scale as they're growing and what their revenue looks like and what kinds of advisors they have on deck. And then also think about your bank that you send hundreds of transactions through every single year, how they're serving you, and whether or not you've maximized those relationships within your financial institution. Just as Kimberly was saying, based on the institution, they have levels and tiers of folks that are expertise that can help continue to bridge your growth. And I think it's important for us to take advantage of that, and to not only take advantage of it, but to share that information with others that may not know, because there are limitations based on access and simply intellectual capital. There
Mhm.
are limitations. We know they exist. So if you know something, if you've heard it, share this as well so people can make better decisions about how they move. And Kimberly, I love that you broke that down for us just to hear the tiers, right? We don't even know sometimes exactly where we fall in line, just like we might not be starting with the end in mind, where
Mhm.
we might not obviously be approaching these relationships with growth in mind either, because I'm comfortable with Sally who opened my account versus getting into a conversation with someone that has a more complex, more diverse knowledge base that can help me think about what do I do now that I've reached this multiple $1 million status. I want to grow. We talked about compound effect, interest, all of those types of things. There's a complexity to that you need someone to help work through. And I know my personal accounting team is amazing. But it was like the day I stopped using them just to do my taxes was an eye opener. She's like, "Yeah, I need you to forecast your dollars." I'm like, "Oh, what are all these fields for? What am I supposed to put in here?" And then I could look at this and I'm like, "Oh, this is how all this shakes out." And so
Yeah.
now I can have smart conversations about my money. I know what my retained earnings are. I know what they need to be. I know when I have, as they say, top line revenue, that's the big number, that's the big shiny object. But what's that bottom line look like? Meaning, what does my retained earnings look like? And did I save enough money? Did I retain enough of my profit to call my business profitable? That's a whole nother conversation.
And I'm glad
But
you mentioned that, Kyra. And let me break this down into a manner that is easy for people to understand, right?
yeah.
If you happen to own a stock, or even let's
Mhm.
say you have some investment, and you call and you talk to your financial advisor, and they say, hey, your portfolio for the last year grew 3%. And you're like, 3%? Wow. That may sound like a great number until you learn that savings accounts have been at 4.5 and 5% in the last
You're
year.
under
You could
performing.
have put your money into a money market account or a CD and got 5%, right? It's the same with your business. And business owners sometimes just completely discount this factor. When you look at your bottom line, you want to know your net income is a percentage of what of your revenue. That
That's
tells
right.
you what percent growth you had. Not
Mhm.
growth, but percent return you've had, at least in
That's
that,
right.
just a real
You can
clean number.
project your growth from that too,
Yeah,
right?
you can. So if you
Yep.
were at 3% or 6%, or let's just say 3%, and you are speaking to your CPA and you realize that just through some research that your competitor's bottom line was at 6%, that tells you that somehow, some way, they either had more savings throughout the year than you did in terms of expenses, lower cost of goods sold, something happened, some event happened that allowed them to have more profitability at the end of the year that went to their retained earnings that didn't go to your retained earnings. But these are conversations that you need to be having with your accountant and CPA, and not just saying, hey,
Right.
put these numbers together and file my taxes. You need to be able to understand line by line what's taking place. One of the areas also, Kyra, that as entrepreneurs that I find that are growing businesses, that they don't pay enough, they pay too much attention to the P&L and not enough attention to their balance sheet. I run across clients as I was working with some of the smaller businesses and mid-sized businesses that just through conversation, I would have them go back and talk to their CPAs because I knew visually visiting with them and doing site visits that there were things missing off of their balance sheet that could have
Mhm.
benefited them. And people ask, Kimberly, what are you talking about? If I walk into your office and there's furniture, there's equipment, there's computers, that those computers have software on them. When I look at your balance sheet, you don't have anything under furniture, fixtures, and equipment. That's a problem because you're not properly discounting in terms of giving yourself credit from an asset perspective in a balance sheet, those assets that you own. Every
That's
asset
good.
should be there. If you have computers and you bought software, I know people who have spent tens of thousands of dollars on software. When I'm looking at their balance sheet, there's no line item on there for intangibles. You have
Yeah.
tangibles, assets, and you have intangibles. Intangibles is a software. And you should be amortizing that software, depreciating your assets, because when it comes from a banking perspective, remember when I said EBITDA, that is earnings before interest, tax, depreciation, amortization. You get an add back for amortization and depreciation when it comes to calculating what we would call debt service coverage. And why is that important? When you're that business owner and you want to go out there and you want to take out a loan, the bank wants to be paid back. So they're going to start looking at your ability to be able to pay back that debt based upon some coverage. And one of the banking terms that we look at is what we call fixed charge coverage, right? There's all types of kind of liquidity coverages out there, but that's one of the more mainstream ones. Then you start to talk about leverage. You asked me earlier in the conversation about my personal leverage. There's
Mhm.
also something called business leverage. And you had touched on, Kyra, retained earnings. Well, a factor of your leverage is your retained earnings.
Right.
So year after year, quarter after quarter, you want to make sure that your business is growing profitably because that increases your retained earnings. And that retained earnings number, Kyra, also indirectly leads into the worth of your
That's
company.
right.
So
I was literally, and I'm sitting here like holding on because I'm like, as we share this out, and I really want the Smart CEO community to like really take the time to digest. This is an understanding that we want you to have. Then there are those very specific, localized conversations you need to have about your business specifically. But Kim, you've identified some gaps. You've identified where profit leaks happen, where investment leaks happen, where you underrate the valuation of your business, all of these things, all of these traps that we could be falling in that we don't know because we may or may not have the right advisors around us, or we haven't looked up long enough to realize that we're not paying attention to the actual fundamental infrastructure of our business to actually get there. So our goal in this space, and I'm like, when we think about the smart CEO community, you led me into, I don't necessarily normally pitch it, but I'm gonna say, listen, smart CEOs, the education, the learning, the master classes, the accelerators, the insight from amazing people like Kimberly, the Smart CEO community is designed to create a space for you to learn. So you can raise your hand and ask the question, and understand that is not a sign of weakness. It's a sign of brilliance, because you know you need more insight so you can make better decisions in the business that you're already running in an amazing way. Kimberly, I can't thank you enough just for the fountain of brilliance that you've shared with us today.
Sure.
And I know we could keep going for another 2 hours in this vein, you all. So catch us on the next episode. She said I delayed her appearance on the Smart Talk podcast.
Really no love to Kyra. I was just like, really?
Kimberly, you made it. Let's call all the right people, let them know you finally made it to the Smart Talk podcast. We are thrilled that you're here. We're grateful that you're a part of the community. And as an individual, as a business owner, I am absolutely honored to call you friend and to call you advisor and to call you, I'll say one of my favorite authors is Simon T. Bailey. He said, "Oh, brilliant one." That's what he would say in his books. But just because that insight is real and you live, breathe it, and it's just a part of your fabric. And I appreciate you sharing that so willingly on this podcast. It's going to enrich lives and the thought processes of business owners. So, podcast listeners, Kimberly, one last word. What is the one thing you want them to just take home today?
That you can achieve anything, but not by yourself. Get the right advisors and the right team.
Good. That's good. Smart CEO, Smart Talk podcast. You have heard it from Kimberly Evans herself, business finance expert. I am Kyra Rénel, the host of the Smart CEO podcast, Smart Talk podcast, and the founder of the Kyra Company. It has been a pleasure to let you listen in on a conversation with Kimberly Evans and I today on the Smart Talk podcast. We'll see you next time.
Thanks, everyone.
Thanks for listening to Smart Chat. Smart CEOs, you are on your way. We hope this episode has been fantastic for you. We are excited that you were here. So here's the deal. Follow us on all of our social media, look up the Kyra Company, and join us on all of our private platforms. We invite you to join our private Facebook group at the Smart CEOs. Jump in, join the conversation, and learn more about what we can do every day to grow our business and grow our community. Thanks so much for joining us. We're excited that you were here. Once again, I'm Kyra Hardwick, and you know it. I was thrilled to bring the Smart Chat to you. Take care. Talk to you soon.